67, 40, and 50 today. Market is up in futures. So let's take a look at the tape here. 0.3% futures higher. S&P looking to gap a little bit up. So we're looking at some fresh all-time highs again. We got a 668 close yesterday, opening at 670. Let's see here. 667 is a 10% gain from 1216 discussion. I'm not sure what that was. Was that rate cuts? I don't know. That was some reference from last year. Doesn't matter. I can delete that now because we've hit it. A lot of technical indicators suggesting overbought conditions with divergence. But look at your price action. Very, very, very little evidence of actually going anywhere other than up. So we're in a bull trend. We literally have a situation where no news is good news. We didn't have unemployment claims today. We're probably not going to have non-farm tomorrow. In the absence of that, this is, and also statistically, we pulled this out during one of my YouTube sessions this afternoon or this week. The government shutdowns historically have been good. For the markets, I mean, Clinton had, I think, 2 shutdowns during his presidency. Obama had 1. Trump has had 2 already. That was from the 2016 to 2020 term, and now we have 1 in 2025. But historically, the markets on average been up, and we just closed higher yesterday. It was a pretty volatile day for Wednesday. I mean, I'm not going to lie. We came right down to hit positive gamma support at 66.60, and we proceeded double what the market maker move was for the day. We had a plus or minus 30, and we went up 60 points from yesterday's low. So even from the previous day, and this is what I think is interesting, the previous day's close, the market was down 32 points, and then the market was up 29 and closed at 21. So from the perspective of previous day's close, plus or minus 30 points, we actually were inside of that range. But from the intraday price action, we had a lot of flows that got us right up towards that. If you remembered the levels, I put this in the tracker yesterday. Let's go daily profit play. I'll pull over the tracker. Here is the screenshot that I posted from yesterday. So here's the tracker. These are the levels. I'll note this again today for 10-2. And yesterday's close was 67.11, survived a 67.15 bear call spread. Here is the link. So when the day opened, we opened up right around the 50% ATR. Okay. That was also a positive gamma pivot around 66.60. That 50% ATR held price support, and we ran up to the gettable target, 50% ATR to the upside, and it survived just barely, but it did survive. This was a 67.13. And I was fortunate that, selling the 15 by 20 and 15 by 25 paid yesterday. So anyway, price action still, I mean, within the ATR levels, contained within the 50 to 50%, 50% downside, 50% upside ATR levels, but it did create 60 points of movement from the low to the high yesterday. So there's definitely direction. Let me get some levels today. I'm going to make sure that we're printing this indicator at 67.11 where the close was. Okay. So our ATR up and down, our VIX levels, we'll get those going. We have a VIX at 15.99, another smash lower on the VIX. Futures, down as much as 0.8% yesterday. We came into the session, it was down about 0.4. It just pivoted hard and ended up being positive for the day, going to all-time highs. So a 17.3 VIX going down heavily all day yesterday, just proceeded with the market melting up. Now we're at 15.99, which is right around 1%. So the VIX rule is 16, 15.99 divided by 16. You're literally at a 1% move today. So today's top and bottom, as far as the extremes, this is what my VIX box will represent. We'll have about a 1% move, which is around 67.80, and a move lower to about 66.40. But I'll make the manual calculation. So we'll go here, go up 1%. So 66.75, 67 to 67.80 potential top, and 1% around 66.45. Potential bottom. So potential bottom, potential top, pretty big call levels around the 35, 40, and 50. I don't love a couple things. I mean, the easier trade today, and I mean, I hate doing this because we have to assume that based on the gamma flows today, everything's going to be drifting higher, right? So the easy trade would be a reverse iron condor, which is one of my supplemental strategies in daily profit play. And that way, it doesn't matter if price goes up or down, but as long as it goes somewhere directionally, we can get paid. The directional play would be just to do a bull put spread and see if price will just continue to go higher. And that should be an easy trade for the day, right? I mean, seems easy. If we're going to do it, we might as well get a good credit fill. I just think the level we need to be mindful of is this 66.95. So we're opening up higher. This is what makes it tricky. I'd like to just do a bull put spread, but we're opening 0.27 to 0.3% higher. So we're going to be opening up into all-time highs, right? So we're opening up here. Don't delete that. We're opening up around, I mean, we're probably going to open up around 67.25 or 67.30, which means if I did a bull put spread, I'm just going to run right into these resistance levels. So what I'd rather do is look at my ATRs. If we open up again around like the 50% ATR, I'm going to try to sell the 100. Between the 100 and the VIX box high, if I can sell some bear call spreads up here, and trying to go out of the way with a bull put spread, I mean, 50% ATR is way, way lower. This would be like a nothing credit. So again, the market's just like, it's gapping higher. It kind of throws off my plan. I mean, ideally it'd be, we don't really go anywhere. We open up right here and we drift higher. Well, that's an easy trade. But the fact that we're going to be floating higher in futures, opening here, it just gives us, we have to be much more bullish on a bull put spread. And obviously, if this is my potential top in the day, then I want to sell it as high as possible. So I'm probably looking at today as another like survivor day, which is just get your levels out here. Do we go to the 100% ATR? I hope that we don't. Or if we get an extreme all the way up here towards the VIX box high, I mean, selling like the 67, 70, 75, 80, 85, we shouldn't be able to go this high. We shouldn't. We can, but we shouldn't. Okay. So, I'm curious. I mean, I have some skin in the game with the 6,700 by Friday. It's a broke wing butterfly. I'd love to see price somehow come back down below 6,700 by tomorrow, end of day. It doesn't look like we're going to have a non-farm announcement tomorrow. I don't know if the market cares. I think that they should. It's like, oh, we don't have major job data, which is like the one sore point of the economy. What's the labor market doing? It's terrible. But now that we don't announce it, nobody can really worry about it. So we'll see. Longest shutdowns 34 days under Trump's first presidency. Yeah, that's fine. I mean, again, there were two shutdowns under Clinton administration. There was one big shutdown with I think it was debt ceiling talks during Obama's administration, and then Trump. We had I think he had two shutdowns during the 2016 to 2020 campaign, and now we have another one. But I mean, this isn't the debt ceiling. A government shutdown. I honestly, it just means that the furloughs and the job losses that were taking place early this year are just happening again. And it's, the blame game. Democrats aren't making the right decisions. Okay. But Republicans are spending money like we have an 8% deficit. So who's right? Neither one. Unfortunately, our country doesn't have a centrist. And I don't know if we ever will. I feel like what we have is you're either, I don't know. It just feels like we're leaning further right or we're leaning further left, and I don't think either of those are good. Eventually, I think we're a country that's going to chew ourselves up from the inside. Versus, I don't know. Again, I'm not. This isn't a political thing. It's just it's a weird state. I feel like what we do have going is we have a K-shaped recovery that is still happening. We're trying to bottom out, right? So this is K-shaped since COVID. This is the haves. So the haves have more, and the have-nots, if here's the deal. If you're not invested in the stock market, you're being left behind by far. The amount of money that prices have gone up, the price increases we've seen since 2020 have been enough to force most American households to be living paycheck to paycheck. Like literally 60 to 7% of households are paycheck to paycheck. My fiance got like a $20,000 raise last year with a step into a new position. And I mean, I guess the difference is we have a child now, so things have gotten a little more expensive, but it's like We don't do bad as a household income, and yet somehow we're both still talking about budgeting, and it just doesn't make. I'm like, I can't believe how expensive stuff is. I've gone to the grocery store 3 times this week and haven't walked out with a single less than $100 tab, and I'm just getting some like snacks for the kid. So it's crazy, man. But at the same time, gold's at all-time highs. Silver's reaching all-time highs. Housing is the most unaffordable market. Ben, it's at all-time highs. Stock market, of course, at all-time highs. Does it all smell bubble? Maybe. But you've got to be a super pessimist if you want this market to tumble over and do what? Nobody knows what's going to happen. It's going to be a bubble. But what do you want to have happen? What do you want? You know, do you want the market to have a reality check? Sure, fine. But don't break everybody, to basically ruin stock portfolios, damage household income and equity portfolios. I mean, if you have household equity, which everyone does right now, if you own a house, you have household equity. If you're going to break that, if you're going to threaten that, then things are going to get really bad. But as the saying goes, if the U.S. catches a cold, the world gets the flu. So, I mean, right now, the amount of foreign investors in the U.S. is as high as it's ever been. So everyone's talking about how people are leaving the U.S. No, they're not. Like U.S. flows are still alive and well. We have some of the biggest companies in the world. This whole run to AI, I think the market is certainly getting a little bit over its skis with the optimism that is clearly getting baked in. Because you look at a chart like this, and we don't really see reflexive rallies that won't stop going up, right? So, I mean, I think that we are on. Look, sideways is realistic to me. Sideways. So we've had a 20% peak to trough. We've had a 38, 39, almost 40% bottom to top. And I do see sideways is one of those things that nobody's talking about, right? The market can go sideways for a 3 to 5% correction. The market can go sideways for a 5 to 10% correction. But just going higher and higher makes me a bit more bearish in the short term as we possibly stretch into, I mean, is it possible that we hit 20% for the year? In fact, let's find out what it would have to be. If we go to the yearly candle, I want to see what a 20% performance looks like, because I don't think it's ever been done that we've had 3 years in a row at 20+%. I will fact check that, but I don't think we've ever had 3+% years at 20%. We've had 20 and 20 and 10-ish, like just over double digits, but we never had 20, 20, 20, I don't think. But what do I know? I'll fact check that. So we started the year, it's just a massive candle, but we started the year around, this is SPY around 588. Let's go SPY. Let's find a 20% level. So if we're up 20% for the year, it's not that much higher. So we'd be at like 705, 706. Okay, so I'll put this out there. 705. Okay, so that would be a year-to-date run. So I'm just going to throw it out there. Like, this is where the melt up might be going. Obviously, a big fat round number at 700, big fat round number SPX at 7,000. I mean, that might be the destination. AAII sentiment came out yesterday. Again, the bulls have stepped up a little bit. The neutral party is decreasing. So we went from 16 neutral to 19 neutral, now back to 17.9. The bulls have stepped up from a big jump, 28 to 41, and now 42, almost 43. The bears are still high. I mean, higher than historical averages. Was yesterday U of M? We had historical. Was it U of M sentiment yesterday? Maybe it was the last time it printed. Let me go to. Was it last week? Maybe when we had that core PCE on Friday. So sentiment. I mean, here's how bad sentiment is. If I go back further in time, I mean, sentiment hasn't been this low since literally the Great Financial Crisis. That to me is nuts, man. Like, how are people missing out on this? I mean, if anything, if the market's taught us anything since 2009, it's that buy the dip works. And I just don't understand how these surveys are showing such terrible sentiment. And I think this is also the reason that is fueling this pain trade to the upside. Until, I mean, it's so dumb, but it's like as soon as sentiment stops getting bearish, the market might not go up anymore. As soon as AAII sentiment stops getting so bearish, the market might have a top or maybe go sideways, right? So that's probably my next concern is like the bears just give up, right? The bears wave the white flag, they give up, and this thing dips down to like 30%, and this gets up to 45 to 50%. Well, historically, highs around 50% has typically equaled corrections, right? I mean, we had a 49.8 1-year high. The 1-year high was back in November, and we had a nice 6 to 8% correction in December of 2024. So if the Bears then eventually throw in the flag or the towel, wave the white flag, whatever you want to put it, and we get frothy on the bullish side, then it shows me that now people are jumping in, chasing the highs. That FOMO is officially kicked in. I think that's a contrarian play. But the whole reason this has been a pain trade is because it's been so bearish out there. Everyone's worried about the recession. Everyone's hedging for recession, and it just won't happen. It won't happen. P ratios, I know they're not talking about it, but at the same time, I have. Let me see if I can find a screenshot here. I know I have a. I'm going to pull out an oldie but a goodie. Let me see if I can pull this drive out. Give me a second. (2025) mid-year review. Was it this? Yeah, here it is. So I did a presentation for a firm early this year, and this is the first half of 2025. So we had the big bond market flinch. Main Street, Wall Street continue to diverge. I think this is the case. I mean, Main Street is feeling labor market struggling. People are persistently paying more money for everything. It's a struggle. It's a struggle. Main Street is feeling what is recessionary. We have a lot of recessionary indicators that are flashing right now, flashing warning signs, but Wall Street is behaving very differently. So I think there's a big divergence between Wall Street haves, have-nots, Main Street. It's not great. But I could say it's like if you have exposure in the stock market, it's at least offsetting some of this concern. Bulls and bears make money, extremists lose money. AI is all the rage. It is. This, in fact, I mean, I did this in like May or June of this year. It is literally all the rage. And I think the market is excited about having more rate cuts, and the market is excited that AI is the future. If AI is the future, the governments better get ready for universal basic income, because there's no way that governments are ready to support all these crazy, insanely profitable companies that are making money hand over fist with 80 to 90% profit margins and have millions and millions of workers that have no purpose and nothing to contribute, and a skill set that they can't get a job because now AI has taken that job in the next 5 or 10 years. That's a terribly bleak outlook, right? But it's like the market, for its blinders and its forward guidance, is like it is the CapEx spending, the frothiness of AI right now is insane. I put JPY's potential blind spot. I still think that it may be. It's just technically it's not happened yet. Mag 7 still rocking and rolling. I mean, we saw it this week. If you have NVIDIA that's green and everything else is down, the market still stays at the highs. This week we've had, I mean, Tesla's going to all-time highs again, or getting close to all-time highs. Tesla's been a huge rip. And it was revealed that Musk threw in an extra $1 billion of shares. Global melt up, PMIs are rising. What I want to show you is this right here. Okay. This is valuations and forward returns. We are at 20 plus times price to earnings, and we are 3 times plus price to sales. Price to sales, that's like the highest on record for the S&P. And when we have Mag 7s at almost 30 times earnings, and we have the overall market at 22, 23 times earnings, usually forward returns are pretty crappy. They're really crappy. Like, I just think that we expect like the market's going to make 20% a year. I don't know. If it's making 20% a year, it's because we're debasing our currency 20% a year. It ultimately, if you look at the behind the scenes, it's like it's a break-even game. But it's like a necessary evil. Like, you've got to be in these markets, and it sucks because it just exposes people to so much volatility. And then you have households that are at all-time exposure levels. So all sorts of stuff spells trouble and caution, but that's why something as simple as understanding how to insure your portfolio, taking income trades and not being fully exposed. I'm not 100% exposed to the market. I still have 47% of my accounts in cash, which I don't love. I don't love that at all. But I think that's important for a time like this where I'm not excited to buy at all-time highs. I'm not. And so what am I doing? I mean, if you're in my waterfall income class, we are buying with a cushion. If you're in my pinch point, we're taking individual trades. If you're trading with me every single day, daily profit play, we're taking individual trades. It's just a trade. We try to win the day. We try to win the week. We try to win the trade. That's what we do. Okay. So this overall investment, I mean, I'm looking at trying to keep things very simple, keep the allocations, but dry powder is, I think, a must, and having some hedging is ideal. So I don't know when the market turns. I don't know why the market's going to turn. A struggling labor market didn't turn it. A government shutdown didn't turn it. The buy the rumor, sell the news of the Fed cutting rates didn't turn it. Okay, I'm out of ideas. What's next? I don't know. I don't know. Like what else happens that maybe turns the market we might not even be talking about. It might not be on our radar at all for 2025. And that's what can happen. It's called a blind spot for a reason. You know, so I thought maybe global yields going up, maybe the Japanese yen as a risk off currency and a currency that is going to likely see additional rate hikes. If the BOJ hikes rates, that does take away some of the carry trade. So the leverage within the system, I think that's another thing that probably has to happen is if we have a deleveraging like we saw back in 2022, that's really why the stock market went down. It was a massive deleveraging. I can see that happening again. But sideways is fine versus it's been a great party. It's a bubble. The market's it's not, it doesn't have to be a bubble, right? The market can just stop going up for a second and we'll see what sideways looks like. And if it turns over and takes out some lows, then we'll get ready for a correction. I think correction still offers a dip. I think 7,000 looks pretty good. I think the run into 7,000 plus, I'm like, just continue to be surprised by how well this market can stay resilient. And I'll make this really simple. Day after day, if we are sitting in a positive gamma environment, every single day, that means the market is going to do better, just going higher. If we're positive gamma every single day, flows, the market's going to go higher. It's when this thing rotates over, gets a negative gamma, that's when we see the downside. But it's few and far between. So just got to be ready for that. Okay. And I said this actually in the bottom of April. I said, if we get back to all-time highs, this is probably going to be one of the most hated rallies that we've ever seen. Tom Lee actually said that a couple months ago. He said, this is a rally that everyone's hated. And I said that during the April bottom, because if we got back to it, I'm like, what a stupid correction this market had. It was unnecessary to have a 20% correction based on how it played out. Okay. So anyway, it's time to trade. Market opened a little bit higher. We're gapping. Let's see what we can get for the day. So I'm just gonna hang out for a second. We're just into the open. Could we sell we're at 24. Could I sell? What's the plus or minus on the day? Plus or minus on the day is, let's go to SPX. Are you kidding me, dude? Plus or minus 17. That's awful. Which means there's going to be little to no premium to the upside. Gosh. Chart alarm, SPX 60. Okay, so we crossed highs. We're at 25, which means I could probably sell like a 40. I don't love this trade, but we're opening up right around that 50% ATR. Could I sell the 100 at 67.50? This is 50 to 56. I'm going to see if it looks good. Maybe it does, maybe it doesn't. I could do 55 by 60. Oops. So the 50 by 55 gets me 65 cents. If I get $1 for that trade, I'm okay with that. So I'm going to go up a little bit higher. I'm going to do the 55 by 60 for $1. Pending order. So daily profit play, 67.55 sell call, 67.60 buy call, 5 wide, going for $1. It's only trading for 40 cents. It's not filled. Expected highs, I mean, that's right around the 100% ATR. Markets are still making their way up. Okay, 35 and 40 resistance zones. I want to make sure I'm selling above this call wall if we hit it. Okay, 50, 55. Gosh, I'm trading SPX. So I'll put that in. It's a pending order. Let me see. Let me see this. Are we going to have a nothing burger today, tomorrow? I'll price something else in. I'm going to go. Um, let's flip this around. If I go call side, 2025, 40, 35. So that's a decent fill for today. If we get a, I'm going to take this out to tomorrow. So we don't have news tomorrow. It's. Let me see here. So I've got a butterfly. I mean, I need price to drop 30 points. This butterfly spread, I need price to drop 30 points. Could I do a 25, 30, 45, 40? I'm going to take this trade for tomorrow. Let's see if I can get 6, 10. Hopefully we get filled for $6 at least. I'm looking at a dead zone trade for tomorrow. It's a reverse iron condor. I'll take it for $6 if I can get $6. Not filling. Gosh, such a hard trade to get filled. Get filled is the level that I want. Let me cancel this. If I go 10, 15, 30, 25, that's a 25 dead zone. See if I can get $6 in this one for tomorrow. Not filling. Gosh. Okay. So just waiting, I guess. God, I don't really like that trade. 10, 15. I'd like to be in the 20s, but that's part of my broken wing. So I'll cancel that. Let's see here. Look at our ATR levels. We're right around the 50% ATR. Clearly, that's a target, right? If we drift up higher above the 50, I mean, the 50 to the 100, we could see some price action. If there is resistance at all, I mean, it's gutsy to sell right now. I mean, there's no evidence that suggests we should be selling right at these highs. If I'm going to sell bear call spreads today, I want it to be above my call walls, right? I want to be, at the 100% ATR. I want to be above my call resistance. And if price opens up here and then stalls or has a gap fill, great. But unfortunately, I'm like settling for no credit right now because I don't want to take like 50 cents. I want to take at least $1. So I'm trying to get filled up here for $1, which means I'm giving price room to drift into this resistance and hopefully hit some resistance. I'm not in the iron condor. It's not filled. I'm canceling the trade because I'm not getting filled over $6. So I'm just going to cancel right now. So the only trade that I'm in right now is a pending at 55.60. And this is for today. So I'm doing a 67, 55, and 60. I'm going to do a 65 by 70. And if I'm doing the 65 by 70, I'll do the 75 by 80. This one I might get a little bit more heavy on the contract sizes. So I'm just putting in pending orders right now. Pending orders. Here call spreads on SPX. I'm doing a 67.60. And then so I'm doing the 55 by 60. 55 by 60. Then the 65. And then the 75 by 80. Yep. Okay. So nothing is filled yet. It's in the chat for daily prop play. All right. So what I was considering further the kind of volatility trade is maybe I need to settle for five. I need to be willing to maybe settle in at like a 590 fill. I'd be risking 410 to make 90, but could I do a 25 30? I'd almost rather go lower 10 and then like a 35. This is 25 wide going out to tomorrow. Let me see if I can get this kid's trade for 605. You mother effer. $6. Come on, dude. All right, I'll try one more here at 595. If it doesn't fill, so frustrating. Come on. 590 final offer. Unbelievable. I'm going 25 wide in a dead zone and it won't fill me at 590. Well, now that I say that, I just got filled for 590. Okay. So I have a trade in. This is a new trade. This is out for tomorrow, by the way. So SPX, this is a 10-3 expiration. I'm doing an in the money bear call spread. We talked about this on Monday and Tuesday for my live masterclass for Daily Profit Play. 67.10, 67.15, 67.35, and 67.30 for 5.90. So 90 cents would be the max profit. 410 is the max risk. This trade is for Friday 10-3 expiration. And SPX needs to be less than 67.10 or greater than 67.30. Okay, so that trade's in. So that trade is in for tomorrow at 590. The trades in for my bear call spreads are pending for today, and they're not getting filled. I'm not going to throw in. I'm not putting in bull put spreads just in case the market is going to fall. Okay, if the market's going to fall, and this is what I had mentioned. Look, every time we've seen for the last 3 months now, every time we've seen the market hit all-time highs, we have a decent correction. Hits highs, pulls back, hits highs, pulls back, hits highs, pulls back. It's been doing that routinely since the end of July. So if we're about to see, even though this market could pull back all the way down to here, it doesn't mean we're taking out lows, right? So until this market actually sweeps a low or until it breaks, I think the bigger level for structure change is 65.70 and 65.50. If those lows get taken out, then the bears are getting the upper hand for the near term. And for once, we'll actually, get a top that is tradable. That'll give us a spike in VIX. That'll give us some dips to buy, but give us something healthy. I'd like to stop talking about this 50-period moving average for 100 days because that's what it's been. This thing, since we got up above the 50 period, this thing's now stretched to about 107 bars. Only 3 or 4 other times in history has it been more. So just crazy. We've got a crazy market going on right now. All right. Overall, so trades are in. I've got 3 pending orders on bear call spreads. I've got a reverse iron condor. It's a directional play. It doesn't matter what direction we get. As long as price goes up or down, we will get paid on this trade. So I'm going to go ahead and box this in. Okay, I'll go ahead and box this in. I'll put in that dead zone box for Friday. So let me draw this out. So rectangle, the high at 35. What's nice about it, I can just put the box like that. So my high is 67.35 and my low is 10. There. So that's my dead zone box for Friday. So Friday, dead zone. So what that trade means is as long as price by Friday is either above this box or below this box, I get paid. And so the risk graph is I have 90 cents of profit. I have my 410 of max risk. I have 90 cents of profit. And there's my trade. So I can make 90 cents here if price falls. I can make 90 cents here if price rallies. And I'm risking in the dead zone 410. But it's risk defined. That's the most I can lose. So if we're down here, great. This isn't a trade that I can close out today. But if we're way down here, then if I can take the 90 cents max profit and close it for maybe 50 bucks, meaning like I'll close the trade out for $5.30, I guess. Well, I guess 5.40. $5.40 debit. I'll close it and just take the profit. Okay. Waterfall, you continue to roll out the 40. No, I'm not. I'm hoping for crying out loud that we can just get a pullback. So, I mean, yeah, I'm hoping we have a pullback. And again, to what degree? Well, if we get a pullback that hits the the 21 period moving average, I mean, a pullback to the 21 period, that's a 66.14. So, and I don't think that we have to just stop at the 21 period. I mean, if we get to the 21 period, I mean, that's enough to hopefully get a bear call spread to pay us by the 10th, right? That's a waterfall income trade we've rolled out to the 10th. If we fall to this period, this is the 21 period, or we fall to the 50 period, which I'm exhausted talking about this bar count. I'm actually like I'm flabbergasted by how long this has taken to actually not hit a 50 period moving average. It's still support. It's like the market. It's almost like the market's like, if we go down at all, we're going to crash. So let's just stay up here at the all-time highs and never, ever go down. Like the market, it's like, it feels like it's dancing on thin ice, and it just has to go higher. Right. But anyway, a 21 period and a 50 period, I think, are very realistic pullback zones. And I would like to see it hit. And I don't know what the turning point is. That's been the hardest part. Fed rate cut, thinking it was buy the rumor, sell the news. That didn't turn the market over. More tariffs. That didn't turn the market over. Geopolitical escalated tensions didn't turn the market over. Terrible job market didn't turn the market over. Government shutdown didn't turn the market over. So I'm out of ideas, So what's going to be funny is if the market is down here, why? Right? Why? Everything I just said, but now it actually matters. I mean, I think at the end of the day, it's like price is all that matters. If price wants to go down, it'll go down. I mean, this correction here was led by a dark cloud cover, one day of follow through, a gap lower. It came right down to the 21 period and it bounced right off it. Well, at least it came down to find support. So let's see what happens. Right. But I've got a couple of trades running. So let me go ahead and label this in the platform. SPX is here. I have the October 3rd. This is for tomorrow. So this is my DPP reverse iron condor. This is a trade that I'd like to see price get below 6,700 by tomorrow. That's a tricky one. That is requiring price to fall. And then I've got bear call spread. So this is running for tomorrow. This also expires tomorrow. Waterfalls, I've rolled these trades out to October 10th. I'm hoping the market can spill over a little bit and find some corrections. And then broken wing butterfly here. I got filled in this one yesterday. I shared this in the chat. Broken wing butterfly 68.25. That's out to next Friday, not this Friday, but next Friday, as long as price is below 68.25. So mechanically, I'm hoping that's enough resistance to get a nice profit. I've already set this one, I believe, at a 10-cent debit. If not, I'm going to do it now. I got filled for $1. I'm going to put in a 10-cent debit to close it. And we've been doing that a lot with these broken wing butterflies, taking about 90+% of the profit. So that's set for a 10-cent debit. And then a lot of waterfalls that, in fact, I mean, waterfalls in profit, 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 waterfalls in profit. For the purpose of, I mean, November 21st is my nearest expiration. It's almost like for the purpose of buying power, I wouldn't mind just taking the profit. And I kind of hate to do that because I think these are good, solid trades. But I did a very active pinch point yesterday. I've got lots of waterfall trades sprinkled in. I am chewing up a little bit more buying power than I would care to have. So I've got about $7,400 of buying power left. And that gives me another, 5 or 6 trades, expensive trades. If I'm going to do like a waterfall strategy 2, that might require like $1,000 to $1,500 in buying power. So I can still take another, 4 or 5 trades. But I obviously don't want to be at zero. So if these are going higher, like, this is 60% this is 60% of the max credit at a 99.5% probability. If we just take the profit, it might be fine. We're also going to free up about $2,500 in buying power. So I might do this for strategy 2 and clear up some of these near-term expirations. This one's up 55%. I clear up. This is a 20. I mean, this is $5,000 in buying power between these 2 trades. But the crazy part is both of them literally have a 99.5% chance of profit. That if I can just ride it out, I'm going to make, another 42% of profit, another 55% of profit on this one. But as far as capital efficiency goes, I'd rather get the buying power to take more trades. Okay, nice fill, Randy. 595. Yep. The call fly is still good. Yep. If you wanted to take that call fly, I'll show you right here. So the call fly for daily profit play, it is all the way up here. I'm trading the 68.25, which is a 15 delta. Honestly, if you wanted to even move it up a little bit, 35 and 50. I mean, if I were to take the trade from scratch, I think I might just do this and add it in. A 30, 35, and 50. Do we have any major news next week? I think we have inflation. Oh, fudge. We have inflation next week. Do we have inflation? Do we have any data that's going to report amidst this government shutdown? Sheesh. Anyway, I'm going to try it. So a 68, 30, 35, and 50. If I can get $1, see if I can sprinkle this one in for $1. If this one fills, I'll make this an official alert. I'm putting in a credit $1. It's just the mid price is right around 95 cents. So see if this one can fill for $1. So yeah, I don't know if we're going to have. We should have inflation. We should have non-farm tomorrow, but we won't. And then we should have inflation next week, which maybe we do, maybe we don't. But this is still tentative on the calendar. I don't see it on the Bloomberg calendar. I don't think we're going to have a non-farm payroll announcement tomorrow morning. And then we go into next week. There's also a pretty good sized blackout window for buybacks, which is forced buying. So we're in buyback blackout season. Roughly 1/3 of the S&P 500 companies are already restricted to repurchasing shares as of today. The figure will climb, peaking near 80 to 85% mid-October. So, buybacks, this has been one of the biggest manipulative forces in the markets. The largest buyer of stocks is about to step aside and liquidity is needed most. So to kind of keep this rally going, we're entering into October is pretty much a big buyback blackout window. And if that also means that there is a little bit of a lull in liquidity or a pull of those forced buying, that could also leave the market a little bit fragile. So if there is a seasonal pullback, now is a pretty good time to have it. Yep. So we'll see. So, all right. Pending order at $1 for the October 10th. I've got one that's filled already, and I'm looking at another one. So the trade that I took, the trade that I took for the broken butterfly that was filled for $1, it's trading for like 120 or 130. I'm just going to move the strikes a little bit further out and try to get that $1. And that's what I'm doing here. It's a 68.30, 68.35, 68.50. I will put that in Telegram. Broken wing butterfly pending SPX 1010 expiration. That's a 68.30. And then selling the 68.35. And buying the 68.50 dollar credit pending. Price is close to filling. So I'll let it sit. Okay. All right. And then we should have on the calendar for next week FOMC minutes on Wednesday the 8th. Do we not have CPI? Is it the third week? Okay, so Wednesday the 15th and Thursday the 16th would be your CPI and PPI combo. So non-farm is a no-go. They give us a week in between. Then we have CPI, PPI. We'll have PCE, and we'll have the Fed. The Fed is at the end of the month. The Fed, I think, was like the 29th. Fed watch or the Fed meeting with a rate decision. It's a 99% chance they cut rates. The decision would be 10/29. So they pushed it all the way out to the end of the month. And then there's nothing in November. I mean, this is a pretty good seasonal window. If we're going to pull back, this is the time. If we don't pull back, then I feel like we're going to limp in and have like a terrible Santa rally, and the market might drop, 5 or 10% at the end of the year, which will suck because nobody wants to be, on holidays and looking forward to Christmas and seeing the market down 5 or 10%. But it does happen. It happened last year. The market was down 8% last year in December, but it picked up and fought back and whatever. It's been a journey. If anyone has been trading for the last, 5+ years, it's like this market's been like pretty bipolar. Some of the extremes we've seen, but obviously the sticking point is you buy the dip. You buy the dip, you buy the dip, you buy the dip. All right, where are we at for today? Price action today, 32. Check our gamma levels. ATR, we're right back in the center. Positive gamma above 66.95. Do we make a run, up into these call levels? We'll see. I'm just going to stick with these trades. Maybe for the plus minus on the day, can we do an 80 and 75? Let me see if we can get any credit on these puts. 60, 66, 80, and 75. Just got filled in that butterfly, so that trade is filled. That trade's filled. I'll put that in the official tracker. So trades that are in, I've got 2 trades to update. And you know what? I need to get my levels in for today too. So give me a second. So I'm going to go trade 467. So 10-2 entry. 10-2 entry. Center price, we're talking around 67.30. 67.30. Today's trade, this is actually okay, this is kind of weird on the tracker because I'm doing a 10-3 expiration, which is Friday. And I'm doing the 67.10 by 67.15 and the 67.35 by 67.30 for $5.90. So that's a 5 wide, 590. I just got filled on the broken wing. 10-10 expiration by the 68.30. 68.35. 68.50. Per buck. All right. Tracker's updated. Let's go levels today. So I base this on the close at 67.11. So we have the 50% ATR up is 67.33. 100% ATR up is 67.56. 150% ATR up is at my VIX box high, 67.78. 50% ATR down. That is gettable around 66.88. And 66.66. It's a bit ominous. $66.43. Okay, notes to be continued. 68.35 not available on Broken Wing 1010 Thinkorswim. You're trading SPX 1010 expiration. It's 68.35. $40. Okay, those are some bear call spreads that I have. I mean, I see that you see the option chain right here, 20, 25, 30, 35, 40. Can you show all strikes? Do you have to go more? Are you trading Thinkorswim Web? I'll go Thinkorswim. I'll show you Thinkorswim here. Thinkorswim Web. Yep, I'll go to Web as well. SPX. Let's go to trade. Go to the options chain for the 10th. I'll go on both sides. It's right there. So it's a call fly. So I would be buying the 30, selling the 35, buying the 50. So the 30 is a 1, the 35 is a 2, and the 50 is a 1. Your strikes are right there. SPX 1010 expiration, a 121 for Broken Wing Butterfly, 30, 35, and 50. So there it is. It's still offering about $1. So you good on it, Matt? What are the Costco trades? Profit? I mean, nothing's bad about Costco. Costco's trading at $911. Is this Project Options Edge? I mean, I have ratio spreads and naked puts. So I don't have anything in October. Let me double check. Project Options Edge. I'll search for Costco. NCLH overall price. So you're saying there's a 10-3 expiration? Okay, so that's IWM, SPY, Zoom, Qs, SPY, Johnson & Johnson, Intel. Those are all profit. I don't have a trade in October for Costco. I have a trade for January. This is a 111, 111. So I'm not sure what you're getting. If you want to send me an email, you meant 110. I also don't have a 110 expiration. It's a 116 expiration. So send me an email. I'm not sure what the trade is you're talking about. I've got Costco trades, but for Project Options Edge, it's January 16th, and it's a 111 trade. So I'm buying the 700 put, selling the 655, and selling the 600. These are, I mean, I look at this trade like this is up all of the honestly, I should be protecting this profit. This is silly to keep it open. This trade is up 83%. This trade is up 83%. So if I want to raise some capital, this is probably a good way to do it. is just close this thing down because I do have a ratio spread. So what I'm going to do is I can close this out like the 111 is the trade. This trade is a 111 that was for $5.43. It's up 547. This one I'm just going to close. This should be trading for like 0. Let me take a look here. So I'm going to close this 111 for 3-cent debit. See if it'll fill. Okay. So I will, for my Project Options Edge, trade management update. Costco, we had a 111 trade for a 116 expiration. It was a buy the 700 put and then sell the 655 put and sell the 600 put for $5.43 credit. Closed at 0.03 debit. And that's keeping like 98% of that trade. So 540 out of 543, I'm keeping 99% of the profit. Okay, so I'm taking that as a winner. On my portfolio margin accounts, I got a little more aggressive with another ratio spread. So what I'll do here is I'm going to close out this one. So close this at 3 cents. Close at 3 cents. And then this one, close it at 3 cents. That'll clean this up a little bit. This one here, close this at 3 cents. Okay, now I can ungroup these. Ungroup, 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 and ungroup, and then put these trades back together. Okay, so for this account, here's what I have on Costco. I have a ratio spread right there. That one's closed out. This one is a ratio spread now. I think I have one more account. There. So now I have a ratio spread for 430. It's up 73%. So Costco, $540 of profit. This one is worth 430. I'm up 315 now that management gets a little bit easier. So now I just have ratio spread, ratio spread, ratio spread. There's a 99.5% chance of profit. This one, I don't mind letting it go all the way to January. Okay. So I'm going to make an update here. It's in the Telegram for Project Options Edge. Costco remaining trade is a ratio spread, 116 expiration. It is a buy the 660 put and sell the 655 put for $4.30 credit. I'm still holding. It's currently up 73.3% of max credit with a 99.5% probability profit. Okay. So I just updated that for Project Options Edge. This is the trade that I'm closing. This is the trade that remains. This was good for $540 for the trade. It was a 111. That's a great win. And then this one here for the remaining ratio spread that I'm going to let it do its thing. Like we're trading at $900. The odds of getting down to 655. I'll look at the options chain. Let's look at the options chain for January. Okay. The expected move onto the downside is 825. We're literally in a trade that is like a 2 delta. The probability of even testing or threatening this trade is slim to none. So unless, every Costco in the country catches on fire in the next, you know, 106 days, I'm pretty sure this trade is safe. So I'm going to let this thing ride out. Plus, we also have a, profit trap. We've got a pretty low delta ratio spread. The chance of assignment is like 2%. So I'm just going to let this one decay. If we get 90+%, then I'll take the profit. But I'm at 73 right now. Okay. Brett says, where can I go to learn this? Honestly, here's a great place. Okay. My Project Options Edge class, I'm doing so I launched this service. This is kind of a supplemental service. You can't actually get this course. Like you can't get this course unless you call in and talk to our team. And this is like, kind of the above and beyond like special service. That's not my intention. My intention for Project Options Edge is there are trades that I will do every single day, every single week, every single week, every single week, every single week that are very systematic in nature. Project Options Edge is the way for me to have my sandbox to be discretionary. There's a lot of strategies that I can trade. I want to trade the markets up, down, sideways to make money. These are a bit more, I'm just going to say sophisticated strategies. They're really just combo trades. But if you'd like to learn more about this, Project Options Edge, I'm hosting for the second time ever a masterclass on Friday. At 1 p.m. on Friday, I'll do a masterclass. If you are interested in getting into my Project Options Edge service, then give our team an email, support@prosperitypub.com, and ask about Project Options Edge. Okay. It's not on my Chris Pulver trading website. I don't talk about it in these sessions. I mention it in reference, but I don't actually I don't have a webinar about it. Okay. Because it is a discretionary trading service. Because if I said Project Options Edge, look, everybody, just listen to me. Here's what I'm going to do to trade it. It's like, that's not fair. So I want to educate you on, there's a lot of ways we could do it. So here, I'll even show you what we have running. So this is, one of my personal trackers for my clients. And I will type in project and I'm tracking all these trades. These are all the trades we've taken so far. Lots and lots of winners. Okay. And we still have open positions. We're going to talk a lot about these. So I have a, let's see here. NVO trade was taken yesterday. Pfizer this week's EIX, DraftKings, XLU, XLE. What else? XOM, IWM, Humana, NASDAQ, MicroStrategy. Like these are all open positions, but we have lots and lots of winners. We've only had one losing trade. No, I take that back too. We had a Iron Condor loss on S&P futures because the upside was threatened, and we had a half loser on Spotify. So of all these trades, I've had one loss that was partial, one loss that was partial, and the rest have all been winners. So again, probabilities, a variety of strategies, we've got the ability to get the job done. Cool. So Brett, hopefully that helps. And anyone else is wondering, when I'm referencing some of these weird names, and I'm like, honestly, if it wasn't for Gerald, were you the one that brought it up earlier, or was it Astrid that brought it up earlier? I mean, I'm glad he brought it up because that was a 111 that is, 99% profit. So it is far more capital efficient just to take the profit. Okay. So I'm taking that profit, and that also lets me clean up the remainder. So now that I've closed out those 111s, now I have ratio spreads that are looking very, very good for another $430 of profit. Okay. So I'm actually overall pretty happy with that. What the hell just happened here? I just went into negative buying power. What the F? That's weird. Did something just get assigned today? Hang on a second. That went from like $7,000 to $8,000 buying power. What just happened? I feel like I just got assigned on something. Robinhood's up 21% at pinch point. Intel. That's so strange. All right, give me a second here. Okay, delay to government shutdown. Yes, we know. There's price action on the day. All right, so price is falling a little bit today. That does make the downside a little bit more attractive as far as finding that 21 and 50 period moving average. And I'm going to figure out where the heck my buying powers went. So I have shares. Okay. Baidu's up to one. I guess I'll just take the profit on Baidu and get back 6K. That fills up a lot of this. My profit target is 155. That's annoying, but I don't know. I don't know why this went from 7,000 now to I'm in the hole. I feel like either I'm over trading on SPX, but anyway, I'm going to take profit on Baidu. I'll go 143. See if that fills. $142.95. Okay, so it just got closed out there. Now I've got buying power back, but I need to find some more. That's weird, man. I'm just doing all shares. I've got shares of CLF. That's fine. Disney. Bitcoin I want to keep. Intel. It's up a lot. I've got a covered call. I suppose for Intel, if I needed it back, it's like it's not a ton of profit back, but I still get some buying power. So if I close this right now, I'm eating that call at 22. Is it 22 or 21? 22. All right, what else? That's the debit spread. Anyway, I'm just a little perplexed. Let me check one more thing. Okay, so I clearly have this is in this account. It looks like I've overextended in SPX. So let me go SPX. This is a broken wing. I'm so confused right now. That trade's fine. So I guess what I'll do is I'll get some buying power back in this one. If you're my waterfall income, I'm going to close out the November 28th. Max credit is 55 cents. It's up 40. So I'm going to go ahead and just put a close in this one. See if it gets fills for 10 cents. Well, that's frustrating, but I'm going to get the buy power back. I'll go 15 cents. It should close. I mean, come on, dude. Don't rip me off. That is $2,500 of buying power. What the heck? All right, let's keep going. So I want to close this one out to get my buying power back. It's not filling, but I'm going to try to let it sit at 15 cents debit. Try to close that one down. That one's still fine. That is just a 40 and 60 bear call spread. Waterfall, 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 waterfall. This one probably good to close it. I'll try 15 cents. So I'll put 2 debits in on waterfall to close those for profit. Broken wing. All right. Very strange. So I mean, the immediate solution for me, and I don't know how this happened. I went from $7,500 in buying power to now negative. So I closed out Baidu for a 60% win, get back about 7K, 8K, but I need to get back more buying power. So that's so weird. I don't know where the heck that just came from. But that's my problem, not yours. So have it changed any things? No. Everything that we took the last two waterfall trades are still fine. What I'm looking at are the trades we've taken. This would have been back in June when we took the trades for those November expirations. They are looking better. For the purpose of my buying power, I am just going to close out the trade. I'm going to try to get this one out for 20 cents or 25 cents. So I had this trade in all of my accounts, so I'm not technically going to like close this out for the group, but I'm going to close it out in my personal account that's now tight on buying power. So I'm going to go to 25 cents, take the partial winner. Got filled at 20 cents. So that was a 30 out of 50 cent winner. Okay. And then this one, I'll try to bump this up to 20. This will be 30 out of 50 cents as well. Okay. So that gets me additional buying power. Have I just chewed up all these in like working orders? Maybe it's just too many pending orders. So this one is to close for profit. That's to close for profit. That's pending. I will take this one off for right now. I'll take this one off for right now. That should increase my buying power as well. Pending order. This one's probably not going to fill. This is by Monday. Yeah, this one's probably not going to fill. So I'm just like, what is happening? Where's my buying power going? I just had this back up to like $5,000. Jeez, all right. Anyway, this is my problem, not yours. I'm just frustrated. Like I should have like $10,000 in buying power, not two. Son of a biscuit. Anyway, there's some weird numbers going on. Yeah, so I'm canceling some of my pending orders, which will, they will tie up buying power. So pending. Those are only $400. Like that shouldn't be tying up all my capital. I literally had $7,500 in option buying power today, and it went negative by like, I mean, that was like a $17,000 swing. So I'm not exactly sure where that is. All right. Anyway, I'll figure it out. Meanwhile, today, price is making its way down. Let's see what we have. So we have I'd say a gettable target. 66.95 is reasonable, even though it is kind of outside the expected market range. Plus or minus 16 on the day, but going from a high at 31, could we get to 95? I mean, we absolutely could. This is a positive negative gamma pivot point. So if we come there, do we bounce off of it or do we go through it? If we go through it, then obviously this correction could start to get underway a little bit more so than, just having like a one-off correction, but it is starting to roll over a little bit, which is good. If this direction continues, then the dead zone that I have for tomorrow is going to be looking better as well. So I just want to see if price gets out of this dead zone. And also that means that the broken wing butterflies that I have for tomorrow will be good for profit as well. All right. So I will call I'm going to call the Tasty Trade desk once we get off session, because I mean, I get it if there's something going on with like some floating positions, but I don't have like super expensive trades out there floating. All my trades are defined risk. So there's no reason for me to have $7,000 go to zero and $7,000 go to -6. Like something weird happened there. So like I said, I'll figure it out. But that is a lot of SPX and pending orders, but I've cleaned up a lot of those. Okay. Anyway, like I said, my problem, not yours. So far for the day, mindful levels, be watching out for If price is going to be falling, we were just shy of the 50% ATR to the upside. Here is the positive negative gamut around 66.95. That could be a gettable price target today for the bears. The real question is, do we get there? Number one, if we get there, do we bounce off it? So it's similar to yesterday. I mean, it's funny how we've had kind of these 2-day stretches where it's like the market does the exact opposite, right? Yesterday it was gap lower at the 50% ATR and go up to the 50% ATR. Today is gap higher nearly to the 50% ATR and possibly fall maybe down to it. So just price action. But I think 66.95 and 66.85 are potentially, levels on the day. If it stays quiet and we have this high, this low, then the market just chops around, and tomorrow's Friday. We'll figure out what happens for tomorrow. Did I cancel the bear? No, I didn't. I'm keeping those running. I like where those levels are at. Those are way up here in case the market, catches support and tries to bid back up. I'm not canceling yet. Not yet. But what I'm not going to do is I'm not going to throw in bull put spreads just in case the market does decide to fall. I'm way more cautious as far as the volatility to the downside. It's been certainly surprising to have the market, stretch to the very, very tippy top of the expected move, even exceed the expected move. But that's why we have the VIX box and the ATR levels. Okay. Who will buy stocks in a shutdown? I mean, you're talking about a government shutdown. Businesses are still open. There's plenty of people that are buying stocks. Okay. In fact, it's probably just easier to think like, good riddance. They don't have to say anything. There's no drama. There's plenty of activity. Look, go back in history and see the last shutdowns. The market's been up every time. So, I mean, we're there. Like we had the market go up. You set a sell order. 10-cent debit. That's correct, Sally. Yep. So a dollar credit was the fill. I put in a 10-cent debit for the close. That's correct. Okay. So let me do a quick update here, and then I'll pull over. Okay, I'll pull over talk. So here's what we're doing today. Pinch point scanner. We had a masterclass yesterday. I'm going to do another masterclass today. If I don't figure out my buying power, then it's going to look a little bit different than yesterday. We had 5 trades issued yesterday in pinch point scanner. So 1 p.m. Eastern time, masterclass / live trade session. So pinch point members are welcome to jump in. If you're a new member, I'll talk about pinch point here in just a moment. That'll be today at 1 p.m. Project Options Edge for the second time ever, 1 p.m. Eastern time, Friday, is a strategy overview, which there's a lot. So this is going to be like an action-packed session. Make sure I spelled it right. Overview plus trade review, because we do have a lot of open positions. So pinch point, I'll get talking about it in a few minutes. Project Options Edge, 1 p.m. masterclass strategy overview and trade review. We do have probably 15 to 20 open positions running. Okay. All right. So there is that. On that note, let me take a look at pinch point today. We priced out. We had 48 stocks to price out yesterday, and we got through about 25 of them. We're going to have another class today to get through the rest. So let me jump into my one-click trading, same member portal that you have. Okay, so search for pinch point and go to the scanner. So it's really easy. You jump into your classroom, access the scanner, and of 9,500 stocks, I've got 35 in the go zone. We priced out a lot of these from yesterday, but trades we took yesterday: UPS, MCHP, SYY, CMA, and Voya. That is UPS is in like, what can Brown do for you parcel. MCHP is Microchip. SYY is Cisco. CMA is, I forgot what CMA is. Comerica. Yeah, Comerica Incorporated. That's financials. and Voya, which is Voya Financial. So those are 5 trades in. I will go through this list. So here's MCHP. Some of these are new. OKTA is new. We'll get through these today and we'll price them out. So I'm going to try to find some more trades this afternoon at 1 p.m. All right. If you would like to join me for Pinch Point, you are more than welcome to. We do have a great deal running on this scanner. All I do, this is like a very low maintenance strategy for me. I like to trade what I see on the charts. What I'm getting with Pinch Point Scanner are trades that are spoon feeding me likely direction. Okay. So this is when volatility is choppy, volatility is non existent, but it's coiling and compressing where within probably the next 30 to 60 days, we should have some type of volatility expansion move. And what I want to see is direction. So I get into these trades with very cheap options. We get a chance to price these out where most of our trades are set up to at least make 100% return on risk. And going after a 30, 40, 50% take profit allows me to win 80+% of my trades. So we have an 85% win rate right now of all the trades we've taken. And the best part is I've taken these trades, set the take profit, and all of our winners are automatically closed out by the broker. So we have defined risk, profit targets hit by the broker. We barely have to touch these trades. That's my favorite thing. So it is a very enjoyable service for me to run because it does seem low maintenance, which means I just find great trades, price them out, take them, and then the broker has my take profits and we get filled. So that makes my job very, very easy. And that's a fun service to run. Right. And it looks something like this. So we'll jump into it here. Legal stuff. Pinch Point Scanner is a